Morning, everyone, and welcome to Morning Market Movers, where we do live analysis for day trading. And look at hot spots in the markets today, Friday, May 27th. I apologize, we're starting a minute or two late. Brian and I kind of lost track of time, or more, I lost track of time as we're preparing for today. Let's take a quick look at what our top line news. We told you all week long, PCE is coming out. Oh, wait, by the way, I'm Todd Rich. I'm with Nadex. With me, Brian Caprice from Keep Trading Simple. All right, so PCE just came out, personal consumption expenditures. If we look at the year-over-year numbers, we've got PCE actually dropping from 6.6 down to 6.3%. So we're starting to see some stabilization in the in inflation, where it's not constantly going higher. If we look at core PCE, that's for year over year dropped from 5.2% down to 4.9%. So we're seeing some relief looking at the year over year numbers. We look at month over month, right in line where prices went up at 0.3%, but that was what was expected. The interesting numbers out of all this, personal income is actually down a bit, but personal spending has increased, which I kind of attribute to we're coming out of the fall, out of winter. We're actually seeing some nicer weather. People have been locked up for quite a while. I know that I've been getting out and spending a little bit more, and I don't want to sit in my basement any longer. I want to go out and start living my life again. Now, what are we seeing this morning? There's a couple of things going on. We've got equities. Equities are, like the news, we're slightly in the green, which is kind of nice. We are actually looking at having a positive week. It's been 8 consecutive losing weeks. We've been in the red now since March. We haven't had an up week since March. Here we are at the end of May. I mean, the markets have actually, equity markets have been really brutalized. And I did read that that's the longest losing streak, 8 consecutive weeks since 1932. Now we've had longer stretches. Brian was talking about, in 2007, 8, yeah, 2007. But I think there was a green week in there mixed in, because it certainly went longer than 8 weeks, but we might have had some green weeks mixed in there. The one other thing we see moving is energy. Oil, oil did run up late yesterday, backed off a little bit. Nat gas is getting crushed. I'll let Brian get into that because it's discussions out of the EU on the embargo, but it looks like some negotiating points are on the table that would potentially ease the flow of natural gas. All right, so there's our headlines. Before we jump into it, I need to quickly share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. And if you want to see energies, nat gas has dropped $1. Topped out yesterday, up at just above, just above 940. Now we're down, got close to 840. So yeah, nat gas is the big mover on the day.
Cheap now.
Yeah, and that's not cheap. That's still crazy expensive. Just like oil, backed off from $115 a barrel all the way down to $112 a barrel. It's still crazy.
Yep.
All right, so let's just take a quick look at some of the headline news, then look at these charts. Energies and equities. It'd be nice to have a close a green week going into the holiday weekend. I know I'd like to see it.
Yeah, and we kind of expected that. I mean, there was nothing really earth-shattering. The core PCE came exactly as expected, so the market obviously likes it. There was not a surprise on that one. And we didn't really necessarily think there would be. Like I said, the comments that were made earlier in this week, they had already had that data. So based off of kind of the context of it, we assumed that that's what it was going to be. So the market was prepared for it. And again, when the market is already priced that way, again, it's like, no surprise. Okay, good. Now we can roll in that direction. Some interesting highlights, though, that I think need to be brought up today because, again, maybe not so much of a trading day today because, again, a lot of people are already on the way out. Obviously, personal income, It's not, the income is up a little bit higher, but it's lower than what the forecast was. And again, kind of a weird thing. You hate to see when personal income is on the downside. And then personal spending was actually higher. Now, this is an interesting statistic because combine that with the next one, the preliminary wholesale inventories. We have heard from Target and Walmart that their inventories are starting to get really, really huge and they're having problems. Last night, Dollar Tree and Dollar General both reported, blew their numbers out and upped their forecast. What they're seeing is I forget what they call it, but basically food. They're seeing a lot more people buying food, and what happens in recessions is people stop using Target and Walmart and they go down to like Dollar General, dollar stores. They said that is the first, that is the first retail sign. So people are spending, but they're not spending at the big boxes that are now seeing their inventories go higher. They're dropping one level lower into Dollar Tree and things like that. So signs are pointing there. In regards to the year-over-year numbers, it doesn't. Again, year-over-year is a weird number because if you look back to a year ago, we had one outlier where it was a 0.7% increase. So it looks like it's coming down on a yearly basis, but it's because we have an outlier that was so much higher than everything else. That's what's bringing the total is kind of strange. You can see it fluctuates throughout the year. I think the month-over-month one is the most important. Since we started raising, literally, it's slowing, but I wouldn't say it's peaking. Peaking would be we're at zero, right? Or maybe even a minus point.
Right.
So,
It's still a
again,
positive number.
yeah, it's still growing. And again, if you look at April of last year, obviously March last year was kind of a weird one. May, the May number was the one that was the biggie, and then June was just a little bit less. So are we going to go to 0.3 or will it go to maybe 0.4 because this one is a little bit more kind of pushed back down again? So we'll see. Nobody knows. Nobody has a crystal ball, but I will say, it's nice to say that we've peaked, but to me, this is maybe slowing, but not peaked. And we have raised interest rates twice already. So will the next 0.5 finally get this down to where the neutral point is going to be? Or again, are we going to continue to go higher and higher and higher? I mean, when you talk about the year-over-year number, sure, but we were already at 40-year highs. I haven't seen it. There's no negative numbers here, so prices are still getting more expensive. And again, two different companies that are said, hey, when our sales go up, that means we're going into a recession. And again, both of those companies didn't say anything about increased inventories. They said, hey, listen, when we look at things particularly like food, and I think inside of the article, I don't have it. Oh, here. They talked about how consumables, sorry, at Dollar General, consumable sales grew 9.1% in the last quarter of its major four categories. And it says food prices last month rose 9.4% over the prior year. So
Yeah.
again, and it's no longer Dollar Tree or whatever. It's $1.25 now. Everything they've increased all of their everything is $1.25 now instead of a dollar there. So I know because Jim loves that store.
Not
It's
the
our
Dollar Tree
favorite
anymore.
store. Yeah, no, yeah. They've removed all the signs. They don't say dollar anymore. They just remove it and it just has the price there now. So, but yeah, my daughter loves it. We go there. We frequent that place. Like I said, $1.25 toys that she breaks in 25 minutes. Perfect. But that's what it is. But overall, it's been good for the market today. When you're looking at the different indices out there, they're all in the green, and you'll see that the VIX is obviously coming down now that data is out, as it should. I mean, the big contagion on that one was really going to be like, oh my God, what if it comes to be a 0.4? What if they're wrong? What if it's still increasing? I didn't think it was going to be that way. Again, if it did, it would have been a big moving price, and it was kind of set up there. I mean, it kind of pulled back right beforehand. I mean, this is the Dow. Typically, we'll talk about 15 minutes, and you can see what did the price do. I mean, a lot of times it foreshadows it right beforehand. It literally pulled right back. I mean, from 6 o'clock on until the news, it pushed down, which means it's typically looking for buyers, and there's plenty of buyers sitting down there to punch that higher. So overall, it's
finally
good.
retracing that. Finally retracing that sell-off entirely now from.
As it should. I mean, but there's yes, it's nice to look at that. But on the flip side of things, if you look at the
you go further back. Yeah, it's even more. It's got a lot of retracing to do.
Yeah, I mean. And that's the thing. When you look at this, you'll say, well, wait a second. I mean, that's great. The economy's up, the stock market. It's not. The dollar is down. And you can say, well, why we're rising interest rates? Why is the dollar down? Because the market doesn't believe that it's doing enough, that inflation is going to continue to rise. And it's already priced in much higher inflation.
Which is why we're going to get those 2 half-point rate hikes in June and July.
I mean, you're seeing it in gold and silver as well. I mean, obviously there's a pullback based off of that number because they're like, oh, wait, it's 0.3. They got to raise. they know, and that's the initial reaction. But you can see that, gold is starting to rally back up from where its lows were. I mean, gold and the dollar are showing you everything you need to see. And even bonds. I mean, bonds were gapping higher today and now pulling back, saying, okay, if you're starting to drop back down again, it's going to be a green indice day. I mean, that's how it looks. And again, Bitcoin basically totally flat. Ethereum totally flat today. Nothing. No movement at all. I mean, it's 0.9, not even a percent. Bitcoin is 0.05. So no movement those at all. I mean, the main movement today is sitting over here in energies. And we can look at oil. I mean, yesterday we mentioned 1475. And when we were talking yesterday, it was down around here. And I said, yeah, we could get up there, and it did. It ended up going up there and tagging it right at 1230, and then ran into those sellers. And again, higher time frame level, it hit it, retreat, hit, retreat, hit, retreat, hit it. Again, today, 5:30 reversal time, boom, smacked all the way back down to 112. And again, it's not cheap. It is what it is. Oil is an interesting play, and again, it's kind of linked right now with natural gas. Natural gas is dropping pretty heavily, or pretty far. It did break above the top. So again, there's a couple factors in this one I think we should talk about. I don't know how much more movement we'll have today. Could it happen? Sure, but it is a holiday weekend for us. And again, being Friday, a lot of the other nations are already starting to roll out of it. It did break through, and we talked about 936 being the next area where there's a potential top. Here's where we were yesterday. It did. It spiked through. And all this was really any support and resistance traders. This is why it doesn't work. As soon as it broke through the high, every support resistance trader in the world was like, that's it, we're going long. And then, and then they stick their stop loss right down here. No, because again, this is what the rules tell you. And then bam, they got stopped out. And then it came up and did it again. They're like, there we go. Second how we broke it, go long again. And then they got stopped out again. And if they didn't, if they removed their stop loss, saying, man, the stop loss always gets me out. I got out on the stop loss and now it's higher. That's the excuses everybody makes. Then they lost.
Looking for that breakout. It was really just a supply level.
Yeah. So, and again, this is just technical trading. We haven't even mentioned the fundamentals behind it that drove this one. But as this collapsed all the way down, it came back up. And just what we've talked about, I mean, this is a level that was sellers, right? It was sellers based in there. Sellers finally broke through on the fourth hit it, and then all of a sudden 1, 2, 3, and 4 broke through, and it based, it pulled back, it grabbed that level. Again, the same sellers, and dropped down again. And if you didn't like this one, it dropped, it based, it pulled back right here, and gave you the same exact trade setup. Okay. Now, it's gone now, and this is just purely technicals. I haven't mentioned a single thing about why it moved, right? This is just purely technical trading, and it worked out just how we talked about. The reason why is because of this one right here. We heard this data.
Yeah.
And the Rumleys came out about this, now the EU is working on a Russian sanction deal for next week's summit, excluding pipelines. So they've been talking about we need to just block oil, they can't have it. But now all of a sudden they're kind of saying, well, wait a second, it's not everything. It's just it's just oil because again, Europe doesn't have as much. They don't have as great a demand for oil, but natural gas is what they really need. Now they're saying, yep, Russia's bad. Build that wall, but the pipelines are through, so we'll take the pipelines.
Right. So that's gonna be a release valve for nat gas to still flow.
Absolutely, and that's all this is. And is it a permanent release? They're working on a deal. Again, it's just the fact that there is hope that there won't be this cutoff of why this is pulling back again.
Yeah.
Could Russia still make them pay in rubles and then say no? Absolutely. Could Russia say, oh, you don't want the gas? You don't want the oil? Then you don't get the gas as well. They could absolutely do that as well. So, I mean, there's a lot of factors to it, but just the fact that there is hope now that they're not going to get cut off, that is obviously what's popping this release valve. So pushing back down again, I would say probably today, overall target, I would say probably down to $8 today. There's not a whole lot of buyers over here that we see. Could it turn as soon as the 9:30 strikes? Yeah, it could. But I think we have the ability to get down to $8 today. Is that cheap? Heck no. It's still 4 times higher than it's supposed to be. But it's a whole heck of a lot better than $9.50, and that's kind of where we're pushing to the upside. So,
I will say this, in moves like this, I just want to chime this in. If you're not looking at Nadex knockouts, I'm just going to put these up. I mean, it just keeps going through knockout levels. When you get moves like this, knockouts can be pretty compelling or interesting products to trade, because if something else were to go wrong in a quick turnaround, you are protected. But it's a Delta One product. There's no premium value in any of it. It's moving right in line with the price of nat gas, and this is true for our crude oil and other knockouts as well. We even got them in the indices, but they're kind of fun to be looking at. And you watch me, I can actually see one of them just knocked out while we were doing the show. That's That's the system I've got to refresh. But
Yeah, Dan took full credit for those being too close together for oil. So he's like, yeah, that's my fault. My fault. So he took credit for it, guys. But yeah, I mean, and again, it brings up a great point. One of the things that I like about the call spreads is you can get them in, you can get them in pretty cheap, outside of the money. There is no out of the money in a knockout, right? The
Right.
problem with them is as price moves this much, I mean, this is a 5.5% move. That's a lot.
Explodes.
They're not designed to do that. That's outside of what the bell curve of movement looks like. That's why I talk about ATRs and what the average is. And it's all statistics. You want to make sure that you cover as much as you possibly can in the curve. But if it's out, this is outside. So unfortunately, situations like this, call spreads don't work because once they're printed, they're printed. They don't reprint. That's why the knockouts are nice in this. So you got to be kind of, you got to have multiple, kind of weapons to attack the market here. With, again, Nadex provides that. So, the other thing, besides that, really, that's the biggest mover today. I would say industry-wise, look for these little pullbacks, look for some basing. And again, we would drop down to a 15-minute. Those are the big things. Like I said, I think the energy sector today is probably going to start, bailing on us quickly. Again, we'll see some pullbacks and profit taking. Like I said, this is a big move in pretty short order, so we'll see that kind of dissipate. As far as the indices goes, it is dollar weakness across the board. You may say, wait a second, that's up. Yeah, it's dollar weakness because it's not a surprise. It's kind of like, well, wait a second. If it is slowing, that's where they're saying it's slowing. We don't have to raise interest rates, and the dollar's not going to be as strong. That's on, and again, one other news headline I want to point out today is this one right here. And again, we keep talking about this, how China has kind of positioned itself and what China's goal is, and basically, the World Economic Forum today, they're saying that China's growth remains a stabilizer for the world economy, and a lot of people don't believe this. And again, whether this is the U.S. ego or whatever it is, we're seeing additional weaknesses in the global economy. And again, China is expected to continue to act as a stabilizer for the global economy with its long-term fundamentals. This is what we talk about, how it's very dangerous, the games that we play right now. And again, one of the things today, one of the headlines we did get was our, the goods trade balance. It actually went down, which is actually a good thing. So this is one of those things that this is positive. A lot of people will look at this and be like, oh, whatever, trade balance. I don't have any idea what that means. And you see that, oh, it's green. Okay, great. This is actually a good thing. It's nice that our trade balance is getting back in order. So again, this is just something to kind of look forward to in the future. So much of a trading thing today, but again, understand that this is important. But at the same time, again, kind of scary that, China's long-term growth is considered to be the world economic stabilizer, and it's not the United States. So just watch out for that one. So
yeah,
that's it. Everybody else is already gone for the weekend. So I mean, if you look at everything else, everybody else is gone for the weekend.
So yeah, I know. I'm telling you, I'm hoping to go early day myself if I can get all my work off of my plate. All right, listen. With that, any questions for Nadex, please email us, customerservice@nadex.com. Brian and I are also accessible. We love to get some feedback. You have any questions for us, our emails are right there. You want to reach out to Brian, you got questions for him, you want to give him any feedback, please email Brian, support@keeptradingsimple.com. Brian is a great coach. He's a great resource. So he is available. You can email him, support@keeptradingsimple.com. If you like what we're doing, or you would like to see us doing something different. I love the feedback. We've been getting some incredible feedback from you guys recently. Please email me, todd.rich@nadex.com. I'm not going to recap everything other than to say we had some decent inflation numbers that came out today. Prices are still going up. They're simply not going up as quickly as they have been, so that's certainly encouraging. Equity markets liking it, looking to have a green week, first green week we've had in 8 weeks. And then we've got energies on the move, particularly that natural gas. So if you're looking for volatility today, particularly with people heading out for the holidays, equities and energies, you might see some additional volatility as people step away, and we've got a little thinner markets and people react or position going into the holiday weekend here in the States. I hope everyone enjoys the long weekend. I know I plan on doing that. And Brian and I will be back on Tuesday morning. We can catch you on Tuesday. So until then, good luck in the markets, everyone, and thank you so much for joining us.